The semiconductor space is on a tear, and it's largely thanks to AI enthusiasm, with several names hitting record highs at yesterday's close. We're looking at how far the momentum can go and which names are best positioned to outperform the broader trend. Let's bring in Jordan Klein, Mizuho America's desk-based analyst, and John Vinh, KeyBanc Capital Markets equity research analyst. Thanks, you guys, for being here. Really appreciate it. John, I want to start with you because we heard from a couple of companies in the last 12 hours that had an increase from AI-related businesses, but it didn't make up for maybe worse than expected performance in the rest of their business. I'm talking about Marvell and Broadcom, of course. What does this tell us about the bigger thesis on AI, John, do you think?
I think the larger thesis is still kind of playing out. Like both Marvell and Broadcom reported overnight, and I think you're referring to them. You know, their AI businesses grew well over 100% for each of those companies. But obviously in the near term, we are going through kind of a broader inventory correction, particularly on enterprise. We're obviously seeing some destocking activity there. So obviously in the near term, it's obviously not enough to offset some of those sort of headwinds. But I think longer term, I think if you're an AI bull, we certainly still have conviction in the longer term stories related to these AI names.
And Jordan, I want to bring you in here on that same theme. You know, it's interesting, Jordan, with AI. So obviously a lot of excitement about it, and people talk about it, Jordan, as this as a real paradigm shift, sort of, you know, internet, mobile, and now AI. It also does, Jordan. You just look at these moves, and they are extraordinary. We do seem to be pricing in just a lot of good news, Jordan.
Well, I would agree. I mean, it's rare when you see stocks up 80% in the first 2 months of the year, but I think we have never really seen a kind of investment wave this aggressive across such a large swath of buyers. It doesn't happen very often, and when it does, like you saw in internet and cloud, these semis are usually the first to see it. So I think what a combination of investors chasing performance in beta, a lot of the initial spend is centered early days on the silicon or the semi, companies, and they're the clear winners, while other parts of the market, they're talking a big game in AI and they're talking about new offerings and products, but it's not going to really move their income statement or revenue nearly as quickly as some of the areas in semis. But I would say this, a lot is priced in, but remember, semis historically trade very, forward looking. So people, buy and sell semis on what they think will happen probably 6 to 8 months from now. And that's why people are so bullish.
Jordan, just to follow up on this, I mean, your note on all of this really struck me because you really seem uneasy with the rally that we have seen, the valuations that we are seeing, and yet you still say this is a group you like. So how are you sort of reconciling that? And what would be the signs that you would go from being uneasy to saying pausing on buying?
Well, I'm uneasy just because of the way these stocks are trading. I'm not uneasy at all about the fundamentals, what some of these companies are saying and doing, particularly Nvidia and AMD and Broadcom and Marvell, or the memory companies or semi-cap equipment. I think there's a real long runway for further growth and upside, but I'm always fearful when you get this fear of missing out kind of chase mentality amongst investors. So, I talk to only institutional investors, money managers, mutual funds, hedge funds, and they're not nearly as excited and bulled up as these stock prices suggest, meaning I think that's a lot of quant passive, momentum type trading dynamics as well as retail investors. So I think it's actually a good thing when you see a Marvell or a Broadcom down today, despite because their reports were, I guess, kind of mixed to disappointing. If they were trading up, and when earlier in the day you saw AMD up 7% and Nvidia up 5%, I thought that just was unhealthy behavior. Now I think it's actually more rational to see these stocks pulling back, taking a breather, and I think that's kind of what we need, a little bit of a near-term pause so we can catch our breath without just going straight up day after day.
And John, to bring you back here as well, Jordan talked about Nvidia, their big AI conference coming up here. John, I'm just curious what you expect to hear there.
Yeah, a couple things we're anticipating. We would expect that NVIDIA would start to give us a little bit more color and announce more formally its next generation GPU called Blackwell, or also referred to as B100. They've also kind of teased that they're also kind of dabbling in other areas of kind of AI chip development, looking to maybe get into the AI ASIC custom chip development, and then also potentially looking at what their strategy looks like at the edge. At the edge, right? Obviously, they're heavily dominant currently today in the data center with training and inferencing. But certainly they've got a pretty large footprint today on the client side, and there's obviously a lot of interest in terms of how the AI PC market develops, and they potentially could be a pretty significant player there as well.
John, how big of a catalyst, not just for Nvidia, but for the broader chip industry, do you think its GTC conference is going to be, or do you think it's going to be a sort of sell the news event?
I think it's potentially a pretty significant event, right? Depending on kind of what they message and kind of what they focus on, right? A lot of times these events are kind of more of a sell the news event, but there's a lot of anticipation on what NVIDIA could start to focus on, right? And if they're able to kind of better map out the $1 trillion plus kind of AI accelerator TAM, they've started to kind of talk more aggressively about, that could be a catalyst for the market.
And Jordan, a final one to you here. Another big theme, interested to get your take on for chip investors, an important one, Jordan, is how they think about China long term. The Biden administration, listen, they've made it very clear. If you're a chip maker, you're not selling your latest and greatest to China. It's certainly a dynamic that Nvidia and AMD are having to navigate. For chip investors listening right now, Jordan, long term, what do you see China as an opportunity? Is it as big as we once thought, or no? It's smaller and less of a margin?
I think it's more the latter, to be honest. It's probably the biggest opportunity if you're a company that sells silicon into the handset market. I mean, it's a huge market for mobile. Just ask Apple. But when it comes to anything high performance, or what we call leading edge, logic foundry, it's not as big, if big at all, because the U.S. government has restricted it. And so, look, for memory, it's really big, but they're building out their own domestic memory industry for microcontrollers that go into automotive, industrial, as well as all the silicon carbide that's used to make these power management chips and electric vehicles. Very big. The problem is if you want to play in that market, you're going to have to potentially have a knife fight with all these Chinese suppliers that are allowed to buy the technology and the tools to produce what we call lagging edge semis. And that's, again, silicon carbide, microcontrollers, lower end memory and analog. That's where you don't want to be. So I think it's you want to focus on these leaders that are predominantly US, European, Korean, Japan-based semis that don't have to rely too heavily upon China, because I do think if you're a winner in China, it's coming at a low margin, and people won't put a premium multiple on that, in my opinion, not U.S. investors at least.
Interesting. John, Jordan, thanks so much for joining us today. Appreciate it, guys. Have a great weekend.
Thank you.
You too.